All right, let's get into it. We're gonna go over yesterday's trade because I didn't make a video yesterday. I was busy in the evening. Um, and then we're gonna go over today's price action. I didn't take a trade today because I won a nice trade yesterday, and I was super busy at work, so I just didn't really have time to properly focus today, which is important. And tomorrow I'm not trading, so in terms of weekly P&L, we are on up 361 for the week, which is very lovely, very, very lovely. And yesterday's trade was 13 points on the S&P for £315 in 4 minutes 15 seconds, and that is what we're going to go through now. So pretty much it might be a bit difficult because we've now got all of this all of today's price action on the charts, so it's going to take a bit of a while. But pretty much what I was eyeing up was hourly chart. No, it was on the 15-minute. I was looking at the 15-minute highs and lows from the 8 a.m. candle. We had two lows here. We got this higher time frame. We just got all of these orders down here. This imbalance / inverse fair value gap down here. And then in terms of bullish draws, we had the London high, we had this high here, and this high here with this imbalance. And that was on the NASDAQ. Compare that to the S&P. Drew out the 8 o'clock 15-minute candle there. I noticed that the London high had been swept, whereas on NASDAQ it hadn't. So we had an SMT there. And as the London high got swept, we traded up into this 15-minute fair value gap. And it just didn't seem as bullish. We had this fair value gap down here. Obviously the PM low from the day before that on Tuesday. And it was one of them. So pretty much, what were my notes? Where are they? 15-minute. Scroll back across. So I was looking for a retest of the midpoint to target the London low. So that was my target. And at 9:07, I had placed my limit order with a 5-point stop loss. So you can see here, 926 was my entry, 931 was my stop. And my TP was at the London low for 908. And I ended up closing at 913, I think. Where did we close? Yeah, 913. So we secured 13 points there. And as I mentioned, price already traded up to the fair value gap by the London high. So it just seemed, when we put the two charts together, price seemed a bit more bearish, obviously, as well, with all the bearish sentiment going on. And we had lower than expected employment change. And so from this, we got tapped in this is today, not yesterday. Zoom over here. So we'll just do a little breakdown on the 1 minute. So from 9:07, I have my limit order placed. So that was here. You can see from the 8:15 candle, we broke down. Or the 8 o'clock 15-minute candle, we broke down. So I placed my limit to go short at this point. So we were at the midpoint, stopped just above. And this is the London low at the bottom of this. And we did actually get tapped in a little bit before 9:30. 9:28 we got tapped in. 1, 2, 3, 4 minutes and out. Securing, what would that be? 2.5 to 2.51 to 1. And I just closed a bit early just because it felt like we could see a reaction, and to be honest, I was happy with the profit, like £315 in 4 minutes. If you see that in real money, you're going to take it. And yeah, I mean, there's two sides to this. Like, there could have been another re-entry at 10.25 to then that would have then took the London low and traded down into that fair value gap on a 15-minute that I mentioned. But if I had stayed in this trade, I would have been stopped out at 9.36. So literally, what, 5 minutes later, would have been stopped out and done for the day with my one trade max. And yeah, so it's just one of those. I was pretty happy with this. I think the risk was about 100 and what was it? It was about 120 quid on the stop. Let's have a look. So it was 2%, £128 on the stop. Actually, no, wait, with the new balance in my account, 1.9%. There we go. £124 stop for £423 TP. And if we drag that back up to where we closed, that's about 316, 315. So yeah, very nice, very, very nice. We take that, puts us up quite nicely for the week. Don't have to stress about any more trades this week, and just sort of relax, focus on work. And yeah, it also means that I don't really have to stress too much about taking another trade for the month or rushing into any trades unless it's like very clear. So yeah, because I think I was on about 6.2k balance. So what, 2% of that is 128, double that, it's like 156. And then what am I doing here? It's basically about 5% I'm up on the account this month. So that's very nice. Hence the reason why we don't really need to stress to get into any trades that we don't need to take. And yeah, as you can see, price ended up trading down lower to the PM low eventually. And if we had got in a bit later on with the same entry and same entry criteria and just held it to the PM low, that would have been a 12.5 to 1. Obviously, I wouldn't be going for that normally, but that could be potential 1.6k for £128 risk. So yeah, interesting to take away. But anyone that's watching the markets at the moment knows it's very volatile and it's moving down quite a lot. We look to be in a bit of a downtrend. I say quite a bit of a downtrend. We've swept this low here now, actually. So I'll just mark that out. So that is even further liquidity that we swept. There we go. So 1, 2, 3 lows taken on the 4 hour. The next target is this higher time frame point of interest, which is just an imbalance, as you can see. So I wouldn't be surprised if we see, a bit of a reaction off this. Price comes down, taps this, pulls back, trades lower, and then from here, after sweeping this, maybe we then potentially start to see a move up, and then possibly another push down, depending on the current situation. Noting that there is a little volume imbalance here, actually, so I'm going to mark that out on the daily chart, like so. Drag that across. Perfect. Right. So yeah, that was the trade yesterday. Like I say, 13 points for £315 is all you need. Don't need to be taking big moves. Just got to get your risk management right. And yeah, it was interesting whilst I was in the trade because, actually seeing the digits run like that, I was starting to get a little bit emotional. And I just wanted to take the money off the table and just secure it. So it's something to note, when I am seeing it run like that. Granted, on any other day, price may not even come back up to the stop and just respect the 8 a.m. 15-minute candle, come back up, trace into, like, say, this gap here, and then continue down. But yeah, it's one of those. So not going to complain. I was very happy with the trade. Took a few minutes out to relax afterwards, just chill out, and yeah, I mean, now we can look forward into next week, see what opportunities arise. But yeah, no trades for tomorrow. And then in terms of today's price action, what have we got? So came back up to this level, sort of respected this fair value gap a bit, traded above it, and then displaced back down through it, retraced down, and yeah. So from 7:15, well, actually, let me just go into the news yesterday. We had the non-farm employment change, which was lower than anticipated by quite a lot. You know, forecast 46K, and it was 22K, which is estimated change in number of employed people. So, you know, that's not great in terms of consumer sentiment and people buying stuff because less money going into people's bank accounts. And yeah, less spending pretty much. And as you can see, that has followed through on the unemployment claims, and this is gradually rising. If you look at the previous, it was 209K, and then it was forecast to be 212K, so that's higher than unemployment claims, which is still bearish. And the fact that the figures came in a lot higher than that, you know, it's not looking too great economically in the US at the moment. So yeah, very, very interesting stuff. And in terms of today, so marked out the 8 a.m. 15-minute candle for the break and retest. And yeah, I didn't take a trade today. I was just looking to see if it would play out. Just to see, is it worth, you know, when I get a big win like that, is it worth continuing to trade for the week or just sort of leave it? And if we played the model as we should have done, we would have been stopped out today. So 847. So plus 5 points is 52. So we would have been stopped out there. Plus 6 points, 53. So we would have been stopped out either way. However, on the 1 minute, if we're waiting, you know, we could wait for this breakdown and then you'd enter off this candle here. So where I mark this right on this one here, and then you could do it like that. So 52 is there, 52.26. The target, what, 10 is 47, 37 plus another 5, so 32 for 3 to 1. So there was an opportunity here. It was just about timing, and you know, ultimately, if I had traded this, I probably would have got stopped out today, because I would have had the limit order set. So yeah. So now we see that, like I say, price has traded below yesterday's low, I believe. Have we got the previous daily high? No, it's not even on at the moment. Yeah, so we traded below the previous daily low, and price has sort of rejected off that. So I am anticipating that we see this come lower into that 4 hour. Oh no, so that's the daily volume imbalance. That's the 4 hour gap. I might just put this in a different color to remind myself. Let's put it in like, let's go like orange. There we go. So looking to see the reactions of this, but like I said, nothing for tomorrow, done for the week. In terms of the whole week, that puts us, what? So we got 13 points today, yesterday, 4 points on Tuesday, and like 2 points on, well, it's break even on Monday pretty much. It's £1.55. That was Monday's trade. So we'll say 17 points and a break even for the week, which is nice. And yeah, I think that's going to about cover it for now. Gold is weird. I've sort of cooled off on gold at the moment, not really looked at it too much. Bitcoin is tanking at the moment, absolutely tanking. If we go on the weekly, You know, as mentioned, like way back, we could see price coming down to sorts of levels of like 46K or like 35K. So this sort of range here, I would anticipate that we see price come down to before a potential move up. And it's very difficult to know with Bitcoin at the moment. You know, we have to remember, buying low when markets are like this in the crypto market is risky, just because of the fact that they can keep dropping. There's also a lot of speculation with all these Epstein files coming out that, you know, those guys may have been the creators of Bitcoin, and, you know, in terms of like the funding for such things that they were involved with, it is looking at, well, there's theories that it's looking a bit like, you know, the people could have been funding some stuff that just isn't really great. And the fact that that news has now come out and it's now kind of in public eye, you know, we're seeing the reaction from this, as well as just like general bearish price action. So the fundamentals and the technicals are aligning quite a bit at the moment. And yeah, I wouldn't be surprised if we see it come down to about 45 to 30K. So still a long way to go yet. Like, this is the monthly chart, this is the weekly chart, but when you look at it on a monthly, it seems a bit more realistic. You know, we've got all these orders here propped up by these highs. It would just make sense that price comes down, say, into this monthly fair value gap. I might just mark that out, actually. Might just mark that out. We'll pop a green hue on that. And just put some text in there as well, just for reference. Monthly fair value gap. Right. So yeah, that's my updates for now. And anyway, like I say, going into the rest of the week, we're done. I'll remove all this stuff off my charts now, and yeah, it's pretty much going to be my weekly review. So I will catch you on Monday.